Hey guys, welcome back to the channel. This is Qui-Gon Jinn, and I am here for a little midday update on the Bitcoin price action. So it seems like we're moving along quite nicely here. You've got this big old green daily candle coming in here on the daily chart. And if you remember what I had mentioned about this high volume bar on this daily candle, how these high volume bars usually trigger a reversal. Ever since that day, you got to close at 54,000, right around 54,000 even. You have closed both of the following days above that 54,000 level. You did get this daily candle close, which I wasn't able to cover last night, unfortunately, but you did get this daily candle close, and it ended up closing above the 55K level. So that was the first good sign that I was looking for. And now you've got this, what so far is a bullish engulfing candle, and it is coming right into the zone that we were talking about, guys, right here between basically 58.5 and 60K. So this is where we're really going to start to decide what we're going to do. As I said before, I've been bullish since we came and dropped down to these lower levels. I flipped bullish, so I've been bullish for basically the entire time, and I said that I just wanted to see if we were going to hold above this 55K area. Around my last video, I think my last video that I made, I think was the price was right around here. I said let's see how the price reacts to this level, see if it bounces around a little bit, and then see if we get that breakout, and we can charge up towards 60K. Well, look where we're at, ladies and gentlemen, right around 60K. And so a few things that we did do. We didn't end up coming back to test those lower levels that I talked about, because we did actually end up holding strength above the 55K level. We ended up holding that as support. So that's a good sign, putting in higher lows so far. As you can see just on this short-term price chart here on the 15-minute. So far we do have higher lows. That's a good sign. And we did also break this angular resistance. I know it's drawn kind of weird, but I mean, here's the thing: is I don't even know how you would really draw that as far as getting the most contact points in. I mean, I guess you could sort of bring it out here, but I chose to leave it here because of the fact that there is these contact points deviations above it, and then you also got a contact point there. So when you came down, made a higher low above 55K, showed strength there, you actually did break out and came back to retest it. And this is actually where I was planning on making a video to see if we were to have a successful retest of this trend line. But we did continue to put in higher lows, and you eventually put in this higher high. So it broke this structure that we had gotten rejected from before. You broke it with this higher high, and then temporarily rejected off of this, that bottom level, the 58.5 level that I was talking about. So you temporarily got rejected off that, had, you know, a bit of a pullback there. Wow, whole 3% pullback just off of that level. But as it sits now, we are actually at that anchored VWAP that I told you guys about in the last video. This green line here, this is an anchored VWAP from the bear market low, the lowest price that the bear market got to. And so I've left it on my chart so that I can continue to track it, and track it very closely on the shorter term price action, because it is relevant. VWAP stands for volume weighted average price, and this anchored VWAP, you can anchor it from a certain price. So I've chosen to anchor this particular one from the lowest price of the bear market lows. So just so you have some reference there as to what the anchored VWAP is, in case you didn't already know. So it is a good sign that we are trying to fight to hold above it here. And I did say you might see some consolidation in this zone. And any consolidation in or above this zone is going to be good in order to get to 60k and above 60k. And ultimately, your next area of resistance is still that 61,350 area. But and here there's always going to be the other side to the story. So we're going to have to be rational and look at these things. Because, yeah, even though everyone's excited about the price going up, it's like, yeah, it was a good play. And I'm excited for you. If you were able to get in on a long somewhere down here, or heck, even down here, would have been a great buy. So before I go on to the next portion of this, I do just want to say that this candle body here, if it closes above this line, that's going to be the first candle body close that we have above this line that on the daily chart. I mean, so far since July 29th, you haven't gotten any candle body closes above this line. So the fact that we pushed up so aggressively through this line, as long as you close above this line, it's going to be a good sign. This downward sloping trend line here. So just to quickly take a look at the oscillators here, you did have this stochastic cross that we were talking about before. The other day, when we did a price update the other day, you had this bullish stochastic cross here, and it looks like it's trying to continue through with that. You've got the fast moving line. The blue line is above the orange line, so you've got the fast moving line up in the 26 area. So just need to get that orange guy up past the 20 area, and you'll be looking like you're in pretty good shape. The histogram bar is turning that lighter pinkish peachish color, so the histogram bar is getting lighter. So it looks like you could have this bullish MACD cross actually end up coming into effect if the price is to continue to charge up the way it is, or at least continues to put in higher lows. So that is the quick look at the oscillators. Now, one more thing I did want to mention is these fib levels here, which that is in essence what this gray zone is sort of the area that you want to get above for your short-term 0.5 fib and your longer-term 0.5 fibs. So if you just take it from this previous local top down to the swing low, you do have your 59.5 area, and it looks like we're attempting to close above that as we speak. Now, I did mention that there would be resistance at 60k, so we're going to have to see how that plays out. Closing above this level would be a good sign. You still have 6.5 hours left to close above this line, so closing above this 59.5 area would definitely be the first good sign. But you do have resistance at this level, guys. You've got resistance from back here. Here it was resistance. You could see it was support here, support here. If you go back a little further in time, it was support here, support here, support here. But look at all these sharp wicks that are coming down through this level. So there is going to be quite a bit of resistance at this level, guys, right around 60k. It was the bottom of the range for a long time. For a couple months, it was basically the bottom of a sideways range before it started to turn into a descending channel. And we actually didn't know that it was a descending channel until this deviation came about, and then we started to put in lower lows. So until then, it was really more or less a sideways channel. This was the first clue. Anyway, neither here nor there. What we're worried about is what is happening right here, right now. So I needed to mention that there was a resistance, basically a resistance zone there. If you actually take this, I'm going to take this and bring it all the way out to the all-time high. And you've got actually your macro 0.5 level from the entire range, basically since the all-time high down to this lowest low that we've made so far. The 0.5 of the entire range is 61,384. So right around that 61,350 area. So definitely keep an eye out for that. area if we are to close above 60K. Definitely keep an eye out for this area because that is the next big zone where we could probably see some resistance come in, and then hopefully, you know, either make higher lows above this zone or at least a higher low somewhere around 57, and you know, just higher than 55, but ideally above, uh, 58.5 would be great for bulls. And like I said, again, just reiterating in the last the last video when I was telling people, back here, I said, if you're a bear and you're trying to short, like, definitely be careful, because we have been just stepping up on this liquidity. We've just been stepping up on it, stepping up on it, stepping up on it. And we are pushing through. So bears need to be careful if you're trying to take shorts. Like, I mean, I wouldn't risk it at the moment. If you're in a long, you might want to take some profits, and I'll explain a little bit more about that later, since I only got halfway through the explanation. But we are stepping up on this liquidity, so it's getting a little dangerous to be in short positions at the moment. I'm just gonna try to flip over to this other one. Yeah, so we do have a hot spot here, for over $660 million at 67,000 guys. So $67,000 price point, there's $660 million there. So that's a bit of a hot spot there. So we could indeed end up squeezing and pushing up through this zone. And I actually also want to look at the liquidation data, which is something that I forgot to bring up to begin with. So just bring that up real quick. It does look like we have indeed flipped over the past 24 hours. We have flipped. There's more shorts. There is now more shorts being liquidated than longs. It's not a whole hell of a lot more, but it is more. It is the majority at this point now. And you can see that these red bars are starting to kick up a bit. The red ones are starting to get bigger than the green ones. Here you had 97 million and only 54 million, 97 million in shorts and only 54 million in longs. Let's see what it looks like on the 12-hour. See, these red bars are getting bigger, guys, and the green ones are starting to get smaller. So you've got 58 million on the short side and 35 million on the long. I guess I could step it down just to see what it's like on the 4-hour here. There's obviously been a in the last couple hours, there has definitely been some sort of a shift where it looks like the targets are the short positions instead of the longs. You can see that there's more short liquidity getting wrecked on the 24-hour, on the 12-hour, on the 4-hour, and even on the 1-hour. So shorts are getting wrecked at the moment. Just to go back to the chart real quick, I did want to touch on a few more key points here. Basically, that if we take the whole package of there being resistance, structural resistance at 60K, and also this anchored VWAP here, we are fighting to try to stay above it, but it still remains to be seen whether or not we're going to hold it. It looks good so far that you're closing the majority of these candle bodies above it. But if you actually look at the oscillators, and even though the daily definitely looks like there is much more momentum to come out of it. To me personally, it looks like there's much more momentum to come out of both of these oscillators, the stochastic RSI and the MACD. You did get oversold on the daily, and now you're back above 44. And one more thing on the weekly is just you're at 49 on the RSI, the traditional RSI. It's good to be back above 50, because most of the time, if you're in a bull market, as a rule of thumb, if you're in a bull market, you want the RSI to be above 50 on the weekly. So just to touch on that. So yeah, the daily oscillators look pretty good still. You've broken this resistance or this downtrending trend line. Going over the 4-hour though, you might have a bit of steam left. It looks like it doesn't want to quit just yet. It looks like it was about to give up right at this resistance. You did have this drawback here. But then it flipped right back up. So it looks like there might have still been a little bit more juice in the tank. I'd like to wait to see how this 4-hour candle closes, and then also, but has 2.5 hours left, and then also the following one. So I might be doing an update around daily close just to see if the price did end up rejecting from this level or not. So on the 1 hour, I just want to go down to the 1 hour and 15 minute because you've got your stochastics coming up pretty high and could be flipping down soon. This MACD also looks like, you see the lime green, the sort of whitish, greenish bar flash right there as the candle starts to flicker between red and green. So this symbolizes that there's a bit of trouble in this area. We do, this is the 1 hour chart, so you do have 23 minutes left, but this candle is essentially a spinning top, and it keeps switching back and forth from green to red. And what it will ultimately end up closing as, most likely, if it continues to look like this, is what's called a doji, which is an indecision candle. So this indecision candle here, if you find them at the top of the trend, indecision means just that. The price can't decide what to do in that moment, in that one candle. So it's pretty much just sideways range for that candle while it tries to figure out what it's going to do. But a doji at what could be the top of a trend is considered more on the bearish side, especially if it's red. But we will have to see how this closes, if it does in fact close as a doji, and also keep an eye out as to whether or not the next candle is green or red. If the next candle is green and it engulfs the entire body on this candle, that's a good sign to continue up. If the next candle is red and it engulfs, not even just this one, but this other one here that opened at 59, let's just say 59,400, but really 59,390. If the following candle on the 1 hour closes below that, then you have a bigger signal that you're probably gonna be heading down. So yeah, look, you're starting to turn that lightish green color here on the MACD on the 1 hour. So you might be getting into resistance, you might be getting a little bit exhausted. It's showing a little bit of that exhaustion so far. I'm trying to keep an eye out in case there is any divergences. I don't think I really see one just yet, but closing above this anchor VWAP would be good. Closing below it would be another bear sign. Over here on the 15 minute. Now you do have on the MACD, you have the MACD crossing, or looking like it's about to cross down bearish, and you've got these histogram bars turning that lighter green, and they're sort of, they're sort of falling off a bit. They're sort of trending down, getting smaller, turning that lightish green, and you've got this bearish cross incoming potentially. You also had a bearish cross in the stochastic RSI. You did come back up and try to fight to get back above it and flip it, but it looks as though it's failing at the moment. This is on the 15-minute chart now. So it looks as though it's failing at the moment and coming back down. So these are the first couple of smaller bearish signals that we are seeing on the shorter time frames, but those will, on the smaller time frames, bearish signals will end up likely translating to the higher time frames. Whereas you already have something that looks like this, it might start looking a bit more similar to what's happening on the 15-minute chart. So just definitely keep that in mind. We are at a resistance zone. Like I said, we do need to flip this level, or at least see some consolidation inside here if we want to continue higher. And then, if not, we could reject from this level. And I would hope that we would stay at least above this 55 or 56. We did already break through past this 57.5 area, so ideally you would want to, if we get a rejection from here, ideally you would want to bounce from 57.5 and then continue either the charge up towards 60k or past it, or consolidate just in this zone a little bit more between 58.5 and 60k. So 57,500 is definitely going to be an area to keep an eye on if you're keeping up with the shorter term price action. And then I guess I will just draw a bit of a fib level here to see where that takes us, as far as if we were to top out here or around this level. And you do have your 0.5 sitting right around these levels here where you bounced from before, 54,350. Let me try to get it a little bit more accurate here if I can. So yeah, 54,300 would definitely be good to stay above that. If you do come down to these levels and you come down to the 382 around 55.5, 55.6 area, and you bounce from there and you put in a higher low, it does look as though you're basically breaking this downtrending level of resistance. And oftentimes the price will come, not always, but the price will sometimes come back down to retest that breakout level to confirm it as support and actually confirm the breakout. So the retest is everything. If it does occur, and we don't just skyrocket from here, but then you would continue to put in those slightly higher lows. So those are some things to watch out for. You definitely want to stay above the 0.5 at this like 54.3 area, and then on the short term, worst case would probably be 53k. If we came down that low, you do have support there from the other day, and it's a 618. So definitely keep an eye on these levels. Make a note of it in your books. 53k, 54,350, and 55,650, basically. Right around there. So if we did, but the first and foremost, I mean, this support here, since you did break this structure, you would ideally want to hold and maintain that structure. You would want to flip this structure as support. So ideally, if you're bullish, ideally that's what you would want to see, is 57,500 holding. So yeah, again, also keep in mind liquidation chart. We've got that hot spot at 67,000 for 660 million. And just taking a quick look at the crypto fear and greed index, we actually are back below 20, or we're at 20. We were at 29 just yesterday. So we're back down to 20, which is actually really interesting and odd considering the price has, shot up quite a bit. So I mean, if anything, I'd say that's more of a bullish sign that the fear and greed is at 20, and then the price, as the price is going higher, so it means like you flushed a lot of the greed out of the market and people are not interested for the most part, which is actually pretty sad, because people end up giving up right at the worst possible time usually when it comes to this stuff. And I know that from experience, because there's been a few times where I was just like, what, I give up. But yeah, don't give up just as things are getting interesting, because we're starting to see some interesting numbers here. Oh, and especially that leads me to my final point that I wanted to mention, is we did get a rather sizable uptick in daily exchange volume. So daily exchange volume has actually been swimming between, basically for a couple months now, really. You've been just swimming between 30 and 40 billion on average. Not really, just sort of getting slightly lower lows and slightly lower highs until you ended up making this higher low here. And so we have a higher low so far. And now we have a higher high because you're breaking all these levels here. 47.6 billion back on May 25th. And so we finally broke that level. So we're almost, 59.39 billion, not bad. So it is good to see that break in structure on the daily exchange volume, that you made a higher low and a higher high there. So it looks like this chart is starting to turn around again. So that is another good sign, another bullish sign. But just remember, sort of, anticipate a bit of selling coming in from this level, and you want to ideally hold above the levels that I mentioned before. If you want to continue to see the price go up and to these other areas that I mentioned in my previous videos, and also that hotspot 67K zone, which I think there's a good chance of that at this point given everything we've seen here today. So anyway, that's all I've got for right now. I'll try to do another update later tonight. You can also check out my Twitter account, or Twitter X account, at Qui-Gon Jinn. Go ahead and check that out. If you want a link, I will put a link in the comments section below. So yeah, don't forget to like and subscribe, everybody, and I will see you in the next video. Thanks.